Okay, so a lot of you guys have been asking like what strategy do you use and every other thing. So I was like, in this video, why don't I show you guys the strategy that I use? I'm going to be explaining step by step my strategy, the entry rules, my exit rules, and everything you need to know about it. So with that being said, let's dive into the charts. What we're going to be using, for example, here is GBP USD. We're actually doing it on the 4H time frame. Okay, so this is the two moving average that I use, which is yellow one being moving average 20 and the red one being the moving average 25. Okay, so right now let me explain how this strategy works. Okay, so on the chart we actually have the yellow moving average and the red moving average. Let me color this one to be yellow and I'll make this one to be red. Okay, so right now these two moving averages actually represent two different things. Whenever you see the yellow moving average above the red moving average, it's actually telling you that there is a buy in the market, and whenever you see the red moving average above the yellow moving average, it actually tells you there's a sell in the market. And not just that, whenever you see price above the moving averages, it's actually also trying to tell you to take a buy, or whenever you see price actually going below the moving averages, is actually still trying to tell you to take a sell. So both of these things actually work. Okay, so let's go back on the chart and let me show you guys exactly how it works. Okay, just before we continue, I want to let you guys know that the moving average actually has two jobs. The moving average acts as a support or a resistance in the market, or the moving average actually acts as a confirmation to actually take buys and sells in the market. So from these examples I'm going to show you here, you'll see how the moving average acts as a support or a resistance in the market, or you actually see the moving average telling you to take either buys or sells in the market. So first off, we're going to start with how does the moving average tells us to take a buy in the market. Okay, so how the moving average actually tells us to take a buy is when you see price going above the moving average, as you could see here. Okay, so one thing about the moving average is that it doesn't just show you when to take a buy or sell in the market, it actually tells you how long you should hold the trade. So once you see price actually gone above the moving average, you don't need to close your trade except you see price going below the moving average. When I mean price going below the moving average, I actually mean a red healthy candlestick going below the moving average. You could see that price didn't go below the moving average. So what this actually means is that you can actually take your trades from here and close your trades here. So for that, let me bring out this tool right here. Let me say you took your entry here, you have to keep your stop loss right below the moving average. So in case if price tries to go down, try to do one of those little fake outs it does, it will just hit your stop loss and your account is actually safe. Okay, so let's go back to what we were saying. So where we could actually see a healthy red candlestick going below the moving average is at this point here. So we could actually target our trade from here to here. Let me stretch that, and this is actually 316 pips, and if you check out the risk to reward ratio, you could actually find out that your reward is actually higher than what you risk. So this is actually risking 1% to make 6% in the market. Okay, so right here, this is another example that we can use. Let me give you guys one of the things that I'm actually noticing from this trade. So first off, we're actually seeing the yellow moving average above the red moving average, which I've already told you that that's actually a buy in the market. And whenever you see one of these moving average actually having a switch, that's actually trying to tell you that there's actually a change in trend in the market. And whenever you see the moving average trying to switch up like this, know that there's actually a change in trend that is actually about to happen. And one other confirmation that we can actually use is price going below the moving average. Okay, so looking at this right now, we could actually see price going below the moving average, which is another example that you have to use and take your trade. So price tries to go above or break above the moving average, but the bearish force that is still actually in the market is actually holding the trade for it to go below the moving average. So right here we could actually see all the confirmations we need. We're actually seeing the red moving average above the yellow moving average, which is very, very important. And not just that, we are actually seeing price below the moving average. And whenever price tries to go above the moving average, the bearish force from the moving average will still tell you that, hey, this is a downtrend, and help to push the price down. And also, one thing I actually love about the moving average is that we are also seeing the moving average acting as a resistance. So whenever price tries to break it, we see price pushing it down. Whenever price tries to break the moving average, it goes down. Whenever price tries to break the moving average, it goes down. So right here we could actually see the moving average giving us those sell entries and also telling us those resistance in the market. So as you guys could see, the moving average is very helpful in taking your trades and in holding your trades. But to make this strategy more powerful than it is right now, you should actually use it with support and resistance, or you can actually use the Heikin-Ashi. But in this video, I'm going to show you guys how you can use the moving average with the Heikin-Ashi candlestick. Okay, so why I'm actually recommending the Heikin-Ashi candlestick is for those that cannot really, understand the charts or understand, price movement. Just to make everything much more simple, you can easily add the Heikin-Ashi candlestick, and you see this one right here, which is Heikin-Ashi. So can just tap it in, and right here, as you can see, the Heikin-Ashi is actually making everything much more easier for you to understand and interpret the market direction. Okay, so right here, what the Heikin-Ashi candlestick actually does is to help us figure out retracement in the market. So with the Heikin-Ashi candlestick, the more green candles that you see, that is actually the trend. So when you see more of green candles, it's actually an uptrend, and when you see more of red candles, is actually trying to signify to you that this is a downtrend. With the Heikin-Ashi candlestick, you can easily know when retracement is about to happen in the market. So right here, we could actually see more of red Heikin-Ashi candlestick, which is trying to signify to us that there is a downtrend. And whenever we see little small green candlestick, that is actually trying to tell us there's a retracement. We could actually see a retracement in the market, and once price got to the moving average, what happened? The moving average had to push price down. Let me use this for example. This is going to be a sell market. Let's just use this for shorting position. You can actually put your stop loss above the moving average and target from here to here. And whenever you see price showing those green candlesticks, you should know that there's actually a retracement trying to go on in the market, as you could see here. So it actually came with little candlestick before price had to retrace. So it's up to you, is whether you want to take retracements in the market. So immediately price got to the moving average here, we could actually see price going down immediately. So at this point, there's actually little green candles, and so this is actually trying to spot that there can actually be a retracement here. So we might likely actually see a retracement here for price to actually retrace to the moving average. Okay, so on this one, we could actually see price going above the moving average, which is number one thing. The moving average is actually trying to tell you to take a trade. Now, once we've seen the Heikin-Ashi candlestick going above the moving average, we'll actually start to see more of green candles than the red candles. So the red candles will actually act as a form of retracement. Once you've taken your trade here, so you could actually target from here to here, and when you see those red candles trying to shoot up or anything, you can close your trade and take profit. So in this point, we could actually see that retracement here. The moving average pushed it up. Same thing, retest on the moving average. The moving average pushed it up to tell you that the trend is still continuing, that the trend is dominant here. And beware that the yellow moving average is still telling us to that this is a buy for sure, because the yellow moving average is actually above the red. Okay, so for you to get the moving average, the two moving averages are 20 and the moving average 25. The yellow one is actually moving average 20. Let me show you guys the setting right here. Yellow one is moving average 20, then the red one is actually moving average 25. So you just have to set the length of the moving average to 25. You have to change the style to red. Then this is obviously the simple moving average, so it's not exponential, just simple moving average. Although the Heikin-Ashi candlestick is only available on Tradingview, so you can actually download Tradingview with the link in the description. Go download Tradingview. You can use it on both your laptop, and you can also use Tradingview right on your mobile phone. So if you guys enjoyed this video, make sure you give it a thumbs up. If you're not yet part of the family, make sure you hit that red subscribe button. And with that being said, I'll catch you guys in the next video.